and welcome to this week's What's Hot. Now, I may not have predicted the boss of Tesco stepping down, despite last week highlighting his success at one of the UK's biggest turnarounds in retail history. He's probably out of puff. Well, also out of puff in early trading was the stock in London Stock Exchange itself. Now, they had a bit of a wobble after Hong Kong Exchanges and Clearing said it was ditching its £32 billion offer for the company. The reason? Unable to engage with management. But look at where the shares have come since July. Well, GVC is attracting interest as a possible FTSE 100 contender come the next reshuffle. Now remember, this is the company that bought Ladbrokes Coral at the end of 2017. It's now one of the world's largest sports betting and gaming groups. It holds licenses in over 20 jurisdictions and employs a workforce of more than 25,000 people. It releases an update Wednesday. It follows the October 4th announcement about strengthening its management team. Well, Thursday, it's soft furnishings, face cloths and snuggle company Dunelm, which is releasing an update to the market. Now, Andrew Hall from UK Investor magazine says the signs were positive when the full year figures were published. Active customer numbers are growing both in the stores and online. The rate of growth in the first quarter will be interesting, he says, because it will have a strong bearing on growth this year. Now, first quarter like-for-like growth in store sales is expected to be 3.5%. But it could be even better. But what impact of that special dividend of 32 pence, what will that have on net debt? Well, another dividend payer reports on Wednesday too. I am speaking about the company Sabre. Now, you'll know Sabre if you've got any young learner drivers in the company, because it is the specialty motor insurance company focusing on segments of the market with higher premiums like learners and younger drivers. Hargreaves Lansdown says, look out for the group's solvency ratio, which is an important regulatory number measuring how well capitalised an insurer is. Well, Sabre aims to operate within a range of 140 to 160%, with any excess earmarked as extra returns to shareholders in the form of special dividends. Now, with the solvency ratio at 181% following the interim dividend, an extra return to shareholders is possibly on the cards. Well, Friday, and it's time for a quiz. In fact, quiz the company. How many people of you have heard of it? Well, it's been going on for a long time. It was founded in 1993 in Scotland. It has more than 275 shops in the UK and more than 50 shops in other parts of Europe and Asia. 2017, the company became public, floated on the London Stock Exchange. Its turnover is in the region of £150 million per year. Well, the chairman, Peter Cowgill, was chairman of JD Sports Fashion way back in March 2004, and the chief executive, Tarek, owns 20% of the company. And as you can see, a free macaroon for every blouse and leather trouser purchase. Now, if you're in the mood for a quiz, here's some factoids for you. Which company, which is also reporting on Friday, manages $114 billion for its clients? It is in fact Man Group, which is going all quant and US expansion. Anyone know any jokes about quant techniques and alternative data? Well, video of the week is Ed Bauscher in conversation with Jeremy Asher, the chairman of Tower Resources. Early stage discussions have started with an oil major about a potential exploration partnership in offshore Namibia, and Asher says we'll have a good idea about where those negotiations are going by the end of the year. And it's the end of this week's What's Hot. I'm full of cold, but I'm sure to have got rid of it by next week when I'll see you again. Thank you for watching.